Hi guys, good evening to all of you. Can you hear me? Are you there? Hello? Can you guys hear me? Are you there?
அதில் ஒரு டியூட்டோன் இருக்கும், என்வாயர்மெண்டல் சொல்லி அதை மட்டும் இல்லை.
Hi guys, can you hear me?
Yes, sir, can hear.
All right, good. Will others be joining today?
No idea, sir.
Okay. Anyway, what I wanted is to do a couple of questions today
Okay.
to show you the kind of way in which the examiner tests, right? And I also wanted to highlight few things on this particular topic, which is ESG, which is like a hot topic these days, right? Mostly focused on sustainability, right? Now, when it comes to this chapter, now you need to pay more focus on this stakeholder impact and then the Mendelow's matrix, right? I'm sure that you know already. The ESG, environmental, social, and governance factors, now that is gaining a lot of momentum now, isn't it? Because of the impact that the corporates have on the environment, right? Another area that is gaining momentum is integrated reporting. So basically, the content elements of integrated reporting, right? Preparation methodologies, right? Or what you need to consider, all that is quite important. Then I want to take you through this. That is the role of management accountant in sustainability and environmental management accounting. Now, this has been quite, an important area when it comes to exam, right? Basically, various environmental subcategories, quality cost, and then sustainability, right? So those have been quite, important. Now, when it comes to environmental management accounting, now traditionally, management accountants focused only on internal information, right? Then they were asked to focus on the external factors also. It became strategic management accounting, where they focus on internal, external, quantitative, qualitative, financial, non-financial. But now there's more focus on organization's impact on the environment also, right? EMA is concerned with accounting information needs of managers in relation to the organization's activities that affect the environment, as well as environmental related impacts of the organization. So both ways. Because the point is, only when you capture these data and highlight it, and only when you capture these data and highlight it and report it to senior management, then it will become to light, isn't it? I mean, if the management accountant doesn't report, then nobody will know, right? So then nobody will take action, and sometimes the damage could be huge, and it may be too late. So now they say capture this data and highlight so that senior management can take whatever decision that are important. Now, in this is very important. Categories of environmental cost. So there are 4 categories: conventional cost, having an environmental impact such as water, energy, raw material. Now, traditionally we call this overheads, right? So then contingent cost, future compliance costs such as clear up cost or decommissioning, money that you will incur in future, and it's very difficult to forecast. Relationship cost, for example, image costs relating to production of environmental information for public. So any material, any money that you incur in terms of maintaining that relationship, right? And then finally, reputational cost, another important cost category, which is lost sales due to brand damage from a failure to address environmental issues. Now, sometimes companies make an environmental damage, and because of that, they will lose revenue. So it's an opportunity cost as well, right? But in an EMA, we call it the reputational cost, right? Reputational cost. So clarification on these 4 cost items are very important for you, right? Then EMA techniques, there are 4: ABC lifecycle costing, input output analysis, and flow cost accounting. These are accounting techniques which will help you to capture environment related, right? So that's why we call it the EMA technique. Now, if you look at ABC, activity-based costing, so any activity that drives cost, it is captured. So in that sense, you capture the environment-related cost also along with the drivers of that. Then this environmental management accounting and quality-related cost. Now, overall there are 2 types: conformance and non-conformance. When it comes to quality cost, we learn 4: conformance cost, non-conformance. Conformance breaks into 2: prevention cost and appraisal cost. So prevention cost, the environmental prevention cost is money spent on preventing any negatives that happen, whatever that is related to the environment, right? It can be even recycling products, right? Using recycled products, not harming the environment, right? Then environment reserve cost of quality inspection and testing. incurred to ensure the organization complies with regulations and voluntary standards. Someone has to come and check, or you need to go and tell the authority, look, we are taking necessary steps. So they will come and check. And you need to spend money on that as well, right? So those are what is called as appraisal cost. Then internal failure, that is a mistake that happens within the organization and the product has not reached the customer. That is environmental internal failure. And the external failure is when the product has already reached the customer. So there you also have another cost called opportunity cost, right? Because when there's an external failure, you also lose revenue. So environmental external failure is a major risk than internal failure. I mean, both are issues, but then external is a bigger issue. Now, should you know the definitions of this? What do you think? Do you know?
So for the prevention cost.
Not only prevention, all of this, should you know the definition?
Yeah, we should.
Yes, you must. I will do some questions to show you how it becomes important. Okay. That's my main focus on this revision. Rather than taking you to theory, I want to show you how it is tested in the questions so that you will understand the depth and breadth that you should know. Remember, in APM, without knowing the theory, you can't answer questions. Okay, without knowing the theory, you cannot answer the questions. I'll show you how it happens. Okay. Right. The main chapter that I want to teach today is budgeting. When it comes to budgeting, right, we are not learning majorly anything new here. Okay. A lot of this is coming from your F2, F5, I mean, management accounting, performance management, PM, basically purposes of budgeting. Right. Let me quickly take you through. When it comes to purpose of budgeting, remember the word prime. Planning, responsibility, integration, motivation, and evaluation. So there you have 5 points. Okay. Prime is the purpose of budgeting. Then top down and bottom up. In top down budgeting, it's basically approach towards preparing budgets. Now, normally what happens is senior management will tell us what needs to be done, and then we have to do it accordingly. We can't decide anything. So that's what you call top down. They give us the guidance. Bottom up is still we have to do the budget, but we can suggest certain things, right? We can suggest, we can give our input. Okay. So that's what bottom up is. Top down has its advantages, which will become the disadvantage for bottom up and vice versa, right? So you need to know both of these techniques, top down budgeting and bottom up. Methods of budgeting, we have the incremental budget, take last year actual budget at a percentage. So when the environment is stable, it is good. Want to have good cost control also, that's a better way of budgeting. And limited discretionary cost. Discretionary cost means costs that are at the choice of management. Now, raw material, they have to spend, there's no choice. But donations to charity, that's at the choice of management. Right? That's at the choice of management. So please thoroughly know the meanings of various budgeting, their suitability, advantages, disadvantages. Zero-based budgeting, every time you prepare a budget, it's a new budget starting from zero activity level. And you need to justify why you want to incur a particular cost item. Then you have rolling budget. Now, this has been a big focus of your examiner when it comes to various questions, right? So in rolling budget, what we do is when a budget period, either month or quarter, so normally we prepare budget on a monthly basis, no? So let's say January to December. When January is over, what you do is you delete that January, and now you have 11 months remaining budget. To that, you go and add another month. That will be the January of next year. So now again, you have 12 months budget. So when February is over, you remove February, you go and add another month, February of next year. So at any given time, you have 12 months budget. And every time you add a budget period, you add it based on what happened now. So it's more up to date, right? It's good for fast moving organizations, for new businesses, because forecasting is very difficult. They don't know what is going on in the market. And any organization that needs cost control, because every time you add a budget period, you will evaluate your performance, right? And do it accordingly. Then activity-based budgeting. Now remember, activity-based costing is something that you learn in F5, right? So we have this ABC, activity-based techniques. There are three. One is activity-based costing, then activity-based budgeting, then activity-based management. You need to know all three when it comes to APM exam. You need to know ABC, you need to know ABM, and you need to know, you need to know ABB and you need to know ABM. All three are important. What is the theory, the advantages, disadvantages, right? Because we don't know what the examiner will test. In terms of ABC, we are not learning anything new in terms of calculation. But theoretically, how we answer the kind of questions that he asks are very different, right? So ABC fundamentally is all about drivers, isn't it? Traditional overheads don't allocate overhead to production services properly. That's why we have ABC. ABC also doesn't solve the problem 100%, isn't it? But it's much better than the old technique. Now, this is important. Activity-based management. You have two, operational and strategic. Operational looks at, short to medium term decisions, right? Basically, you eliminate activities that do not add value. Okay. When it comes to strategic, it's about long-term big decision. What products to sell, which markets to enter, whether you should expand your business. For all this, you need the information or the details of cost drivers, right? Now, in this also, there's something called as implicit value. Now, this is also important. This is also quite frequently tested. Sometimes, if you go to a, let's say, educational establishment, okay, let's say you go to a salon. To a salon, do you think a reception is important? A reception area, is it important?
Yes.
Why?
Does the place look pleasant and nice?
But you're not going there for the reception, right? You're going for a haircut or. Now, that's the thing. Although reception does not add direct value to the salon, you still need it, isn't it? That's what implicit value talks about. In operational ABM, they might say reception does not add value to the hairdressing. Yes, true. But when the customer comes, you need to have someone in the front to welcome them, take the booking, isn't it? And maybe the cashier also will be placed there sometimes, right? So there are certain activities where you need to sometimes take it up at a cost, even though it does not give you any direct value. Those are what you call as implicit value, right? So that's another area that you need to focus on. You have the activity-based budgeting, which is basically doing budgets based on the cost drivers. That is why you need ABC for ABB and ABM. Without ABC, there is no budgeting and management. Remember that. Without ABC, there is no budgeting and management because you need ABC information for the budgeting and management part. And please know these advantages and disadvantages in detail. This is very important. Right, now let me share that question with you to make you understand how it is tested in the exam. Right, I have shared the question in your group, WhatsApp group. Can you please read it? I'll give you about 5 minutes. Have you guys read the question? You guys, have you done reading the question?
Yeah, sir. Reading.
Okay, okay. Let me know once you're done. Right, guys, now let's try to answer this first part. Okay. Now, if you look at the question, it says, explain how activity-based costing may help the agrochemicals division in assessing profitability of the three new products. Okay. So here, explain means it's more like you giving in this definition, more like it's basically communicating or explaining something to someone. So explain how ABC may help a division in assessing the profitability of the three new products. 5 marks. How many points do you write? Tell me that first. What I mean by points is how many small paragraphs, you need to write.
5 points.
Correct, 5 points. Right? Then we need to decide what are these 5 points. Now remember this very carefully. Yeah? If a question gives you 5 marks or more, okay, 5 marks or more, explaining the theory or the technique that is mentioned in the question will give you 1 mark. Okay. Now it talks about ABC. So first you explaining what is ABC, you get 1 mark. Are you clear?
Yes.
Right. That is easy, isn't it? Activity-based costing is a costing technique where we identify the cost drivers of overheads. And accordingly, we allocate overheads to products based on the cost drivers. Overheads are not just absorbed into products, right? Overheads are not just absorbed into products, but they are allocated into products and services based on cost drivers. Cost drivers are factors which make you incur that cost. When you write that, you get 1 mark. Now we need to focus on the other 4 marks. That is where we go here. Assessing profitability of the 3 new products. In short, can you give me 4 points? How will ABC help assess profitability of new products? Type answer here in the chat box. First point, we will explain ABC. We need to write another 4. Very good. By allocating overheads, make accurate product cost. Before that, you can say ABC helps you in identifying accurate overheads. Right? So that is where you will explain there are various overheads. Each overhead is driven by a different cost driver. So cost pool, cost driver will help you to arrive at the cost driver rate, isn't it? And that will help you to identify the accurate overheads for the 3 new products. So you can give examples, the research and development, waste management. So that's how you relate it to the scenario. right? Number three, you can say accurate. Oh, now direct cost. It's easy to find. No. Direct cost plus overhead is your total cost. Because you have accurate overheads, now your total cost of the product is what? Correct. You have accurate total product cost. You have accurate total product cost. Accurate total product cost will help you to decide selling price. Above helps in deciding appropriate selling price. Because you need to decide what the margin you want, how the competitors are, what is their pricing, and with your cost, now you can decide what is the price that you're going to charge. And finally, when you have the accurate product cost and when you have decided the selling price, you can do product profitability. There are some products which will make loss. There are some products which are worth selling. So it will help you in your decision making. It will help you in your decision making. Now, are you clear with the 5 points?
Yes, sir.
Now, in APM, you should learn to structure your answer like this. Understand? You should learn to structure your answer like this. Now, let me put the suggested answer in the group, but you don't have to write like this. If you just explain and write what I have just typed here, that is more than enough. Remember, in APM, you don't have to write paragraphs and paragraphs. Huh? You need to be on the dot. Your points need to be accurate. Okay, you
So
don't need to beat around the bush. Yeah.
So this kind of 5-mark question, even how much we have to write?
That's the thing. Now I have put 5 points. No, 2.5 to 3 lines is more than enough. So you take facts from the case study and you also show some examples and then you write. So 2.5, 3 lines is more than enough. There are some areas where you need to explain, but a question like this that's enough. You don't need to go more. Right, now the second part. Now here I want to show you something. Huh? Look at this. Using ABC, excluding the value of grant from GFPO, calculate the total R&D cost and waste treatment cost of the 3 new products. How many marks? 3 marks. For a 3-mark question, how long do you get? Time. How long do you have?
About 5.5 minutes.
5 minutes. Forget the 15 minutes, huh? 4.8. I mean, yeah. Let's keep it at 5. Right? So you need to understand how efficient you should be in calculation and theory. This is pure calculation. And I will show you how the 3 marks are given also. Now, can you quickly try this? Give you 5 minutes. If you can do this in 5 minutes. Information is in this, 2 and 3. Guys, I will do it, right? In the West, ARG, right? So here they say 300 million for 55 million liters. 1 liter of waste is produced for every 12.5, 2.5, and 100. So 100 divided by 12.5. Eighty-five divided by 2.5. And 35 divided by 100. Is 0.75. Three hundred divided by 55 is so this is your answer. 43.64, 185.45, and 4.09. You can show it for either 1 decimal or 2 decimals. That's okay.
So they are in the question, they are saying that currently cost of waste treatment are apportioned to products according to the expected revenue. Well, that has to...
Very good, very good. Expected revenue is wrong, no, Huda. So you need to mention that when you answer the first part. Explain how ABC helps. So that is not a proper cost driver, no. Right? So proper cost driver is 300 million divided by 55 million liters of waste. So if you mentioning that also in the first part, you can get a mark. That is why they have given you this note for you to adjust it, A2. Using ABC, calculate the waste and R&D. Hope you understood.
So basically that's to confuse us a bit on to calculate, is it?
Yeah, that's okay. That's okay. I figured. And when you do more and more questions only, you will get the hang of it.
Yeah. R&D is a bit straightforward.
Yeah, exactly. Tell me the figures for R&D.
For the working is 60 million divided by 330,400 into 800, which is 1,578,947 for the first product.
Yeah. So
A-
basically, keep it to 1 or 2 decimals. 60 divided by 30,400 into 800 into 85 and into
into
4,000.
4,000.
Yeah. I have kept everything for 2 decimal. Now, do you know how the 3 marks are given? Now you see, for waste, we have to do 2 calculation now. First, we need to identify the liters and then calculate the unit value and multiply. In the waste, there are 2 workings, isn't it? But in R&D, there's only 1. So for waste, you get 2 marks, and for R&D, you get 1 mark. Are you clear?
Yes, sir.
Yeah, so that's how marks allocation is given. It is very, very important to understand in APM how the marks allocation will be. Then you will know how to tackle the question. Where to write, how much to write, you know. That comes when you do more and more questions, you know. Right now, the calculation, the next calculation, if we go to do, it will take a lot of time. But I want to discuss another question with you. This using your answers from part 2, calculate the average net profit per liter of each of the 3 alternative new products over the expected life cycle and comment on the results. That calculation I will share. So you try first and then you look at the answer. And if you don't understand anything, you let me know. But I want to do this key part. In these only the students get normally stuck, you know. Advice, how environmental management accounting, EMA, may help improve the performance of the agrochemicals division. 8 marks. We should have 8 small paragraphs. Right? 8 marks means we should have 8 small paragraphs. Advice, how EMA may help improve the performance of the agrochemical division. Can you just give me some points as to what you will write? You can give me 5 or 6 or whatever. I'll give you about 5 minutes. Just jot down some points. In the exam, guys, what you should do is, right? Let's say this is your exam paper. So now you have to write 8 points. Okay? You have to write 8 points. So you have to say EMA, how it will help the company. So that's your heading. So now you need to have 1, 2, 3, you know, numbers. One you will say what you're going to write. EMA definition or explanation. I told you anything 5 or above, when you explain, you get more marks. When it is 8, you can even write 2 points. What is EMA and what it entails, right? So actually, EMA explanation, you can write 2 points here. You will get 2 marks. What is environmental management accounting? And what does it entail? You know, what does it have inside? You get 2. Then you can write another 6 on how it will help the company, how the performance of the company can be improved. I'll give you 5 minutes. Can you give me some points? Right, I'll make it easy for you. Okay. Now you see in your screen, right? Now this is why I tell you in APM, here is very important. So you write about 2 points about what EMA is. Then you come and talk about the cost items. Environmental management accounting is all about, right, capturing environmental impact both ways from the organization. What we are doing to the environment, and from the environment, what kind of impact that we can have. And how do you capture it? And how do you capture it? To what? Categories of environmental cost. Now, cost classification. We have direct cost, indirect cost, variable cost, fixed cost, production cost, marketing cost. We capture the cost in various ways. Basically, we give a name to the cost. Only when you give a name to a particular cost, you know where the money is going. And then you know whether it is too much or too little and how to control. Similarly, EMA says categorize, identify where your money is going. See, it involves the identification and estimation of financial and non-financial cost of environment-related activities with a view to control and reduce these costs. Now we have R&D, right? We have waste elimination cost. Now these are all related to what? Environment, right? I mean, R&D can be in terms of how do you not, harm the environment. Again, waste elimination. So there, you talk about this. EMA categorizes environment-related cost under 4 headings: conventional, contingent. One by one, you talk. Conventional talks about traditional costs such as raw material, water, energy. Right? If we are using too much water, that is bad, isn't it? I mean, we are harming the environment. There can be leakage, too much resource usage, natural resource. Similarly, energy. Similarly, raw material. Right? Then contingent cost. Right? Cost that we will incur in the future, which we will find it difficult to forecast. So we need to go in that line. That's what I'm saying. If you know the theory, then it is very difficult to answer APM. If you don't know, then we get stuck. I have shared the answers with you. You can look at it later. Let me share the other question that I want to explain. Activity-based budgeting. The activity-based budgeting, rolling budget. Yeah. I just put the question on your WhatsApp group. Can you please read it? Right, guys. So in this, there are two parts, right? So A part is using the data in the appendices. Recalculate the current year budget to the end of the current year and briefly comment on the overall impact of this on the expected operating profit for the year. Basically, you need to use the data that is given here to adjust revenue, cost of sales, distribution, and administration for the next 3 quarters. Because quarter one, now we have the actual, right? Quarter one, now we have the actual. So quarter two, three, and four, you need to adjust and complete the budget, right? For me, right, I want you to tell me the figures for cost of sales and distribution cost. Revenue and administration, I mean, straightforward. It's not difficult. I want you to tell me the cost of sales for Q2, Q3, and Q4 and the distribution cost. You calculate that and tell me how much you will take there. Right, Q2 cost of sales 7,004 and Q3 distribution cost is 683. Yeah, okay, starting from Q3, right? 7,004. Oh, yes. Distribution, you have Q2 also, no?
So they say the fuel cost increase from beginning of Q3, right?
Yeah, so yeah, that's fine, but there is an element for Q2 also, no? Without the increase. Okay, yeah, your distribution cost calculation is correct. But cost of sales, put your luck, Now, in distribution, what you must note is the tax increase is only 3% because already there's a 60% tax you are paying. So from 60 to 63 means the increase is only 3%, right? Because already there's a tax of
And
60.
also not for the whole thing, no. So 70% of that
Correct,
only
correct.
related to vehicle.
Yeah, so the effective rate should be 3 by 160 into 0.7. 3 divided by 160 into 0.7. That's the effective rate. Yeah,
That means
balance 30%. Balance
balance
30%. No
will
tax.
remain as it is.
Correct, correct. Yeah.
And the 70% will impact that 3 rupee increase, which is right. I made a mistake. I thought 3 rupees. It's 3%. I took 3
3%,
rupees in the
3%.
sense I took it as 5%.
No, no, it's
Take
3%.
3 rupees. Okay, that's fair.
APM this is the thing, the calculations, they are a little tricky. So you need to pay attention and, get it done.
Yeah. So now on the cost of sales, I don't know. Sometimes if we even though get the calculation wrong, if we did get the logic right, will there any marks for that?
Okay, there is something called as own figure rule. Haridha. Now that is, let's say, you're doing an NPV calculation. You have gotten the discount factor wrong, but your methodology is correct. For that, you will get marks. Now here, the marks itself is for the correct answer. So Etana, there's an issue, right?
Now here on the cost of sales, what I thought is, okay, only 50% is relevant imported items from VLAN. So balance 50% is not going to have an impact.
Yeah, that is
So,
correct.
and the 50% also because of the currency again getting strengthened, our currency, which is we pay 140 previously, now our 1 rupee equal to 150. That means about 7%
That
of
means
our
our
currency.
currency is depreciating, no, not appreciating. Currency is weakening.
So we pay $1 and for their 140 previously, and our same $1 is their currency 150 in the sense our currency is strengthening, right?
Is it that way or the other way?
Predicted to change to 150. In the Q1, our $1 is equal to 140 of their currency. The next quarter in Q2, our $1 is equal to 150, right?
Where is the company now? Is it in Sealand or Wheeland?
Our company is Sealand, no?
Yeah,
So we are importing from VLAN.
correct.
So the VLAN currency is previously equal to our currency 140. Now it's 150.
Correct. Yeah. Our currency is strengthening, isn't it?
Strengthening by that 0.10.
So if that is the case, we are paying more or less.
Less.
Ah, Then add or deduct.
Yeah, so sir, it's correct to take like if 0.10% out of 1.4 is 7%, by 7% in the sense it's 92.9 or something we pay as a percentage, which gives the 50% cost of sales value, which is reducing.
Yeah, correct. But it's applicable only to 50% of the cost of sales.
And also, sir, because of the sales volume increasing by 2%, cost of sale will also, because items imported also will go up.
Exactly. That's what I was waiting for. Yes. Definitely it will impact on the cost of sales also.
So that 50% will go up by 2% and also reduced percentage of the value. But the balance 50 will only go by the 2% increase.
Normal, yeah. So your first increment should be revenue increase.
Yeah. So, sir, in the cost of sale, with regard to cost of sales, so there will be 50% increase by 2%, and again the 92.9 whatever because of the currency strengthening, and the balance 50% only increase by 2%.
Yeah, I just shared the workings. Just have a look at it.
Okay. So something wrong in the percentage what I took.
Okay, no?
Okay, sir. I missed it on the currency devaluation percentage.
That's okay. That's okay. So this is the thing. Now, when it comes to APM calculations, guys, it becomes a little technical. It's not difficult. If you have a little bit more time, you will do it. Problem is that under the time pressure, you kind of find it difficult to figure it out, right? Other than that, it's not majorly difficult. It's just that by bringing in various calculations, they make it a little complicated. Other than that, this is all straightforward, right? Right now, I want to mainly explain to you the second part. Now, see, let me take you through this very slowly. 13 marks. Evaluate. Evaluate means positives and negatives, pros and cons, advantages and disadvantages. That's what evaluate means. Evaluate a move from incremental budgeting to rolling budgets would be appropriate for dairy division and luxury division. 13 marks, so 13 points. You already have 2 points here for explaining what is incremental budget, what is rolling budget. Now we need to capture the balance 11 marks, right? Now let me go back to the Excel sheet so that I can type and show you. Before that, now you see, I always say theory is important, right? Now I have put the incremental budgeting, what it is, suitability and advantage. So in suitability, we have 3 points. Advantage, we have 3 points. There you have 6. Similarly, rolling budget definition, and you have 3 points as to suitability and 7 advantages. Make a tamai, you have to write there in the answer. Now I'll show you how. Let me take one and show you. Right. Is my screen visible to you?
Yes, sir.
Right. I'll explain one now. Dairy division manufactures cheese and milk. The market in Zealand for these products saturated with little opportunity for growth. That means, is it a stable market or is it a growing market?
Stable.
Stable market. However, agree profitable fixed price agreements to supply all the major in Zealand for next 3 years. So you have already agreed. That means you know what your revenue is going to be for the next 3 years. You don't have to forecast. Next 3 years revenue, you know. Division has also agreed on long-term fixed volume and price contracts with suppliers of milk. So your input cost is also you know. You know your revenue, you know your cost. There's nothing to budget here. Right? For dairy division, no major changes. Right? Saturated market, so no growth. Then tell me, is it rolling or incremental? What is the budget?
Incremental.
Exactly. No need to roll here. Because rolling budget is for a new business where there are a lot of changes. Understand? Now see, if we don't know the theory, maybe a tackle karanda bani. That's how the examiner draws the scenario. It will be in line with your theory. Now look at the luxury division. Right? Luxury division was set up 2 years ago. Rolling division make one of the key thing is what? For new business. Suitable for new business. So if you have set it 2 years ago, then it's a new business. To provide an opportunity for growth, which is absent from the dairy food sector, dairy is stable. Luxury produces high quality food using unusual, rare, expensive ingredients. Unusual, rare, expensive means, is it easy to forecast or difficult to forecast?
Difficult.
Difficult to forecast. Many of which are imported from neighboring regions. You import, you have exchange rate. Again, there are fluctuations, rolling budget. Product range changes frequently. When the product range changes frequently, budgeting is also difficult. You need to do constantly, constantly you need to do budget. You can't wait for 1 year to do budget. Understand? So the points are within the scenario. We will understand the points only when we know the theory. right? So for dairy division, incremental budgeting is suitable. Why? A, B, C, D. These are the reasons. For luxury division, rolling budget is suitable. These are the reasons. We have the answer in the scenario itself. Are you clear?
Yes, sir.
Right, good. So so we need to brush up the theory. Then we can, comfortably tackle these answers. Right, now I will go through the answer that you have sent me also. Today I need to leave a little early. So I'm going to end the session now. But I will share another question with you. Please try to answer that and share the answers with me. And in the next class, please let me know if there are any areas that you want me to revise. Because in one of the classes, I want to take you through transfer pricing and EVA also, because those are pretty critical areas, right? A lot of students get stuck there.
So we
Hardan,
had some homework also last week.
that's the thing. I will go through that and give you feedback, but I'm giving you another homework also.
Okay, sir.
Okay, okay. Okay, then take care.
Okay, thank you, sir.
Thank you. Bye. Okay.